Um, I pretty much finished your video, so all of that looked good. There was nothing that I would go. To me, I think just pushing the button and shooting for um, smaller targets and whatever it makes you. Um, it sounds like you did a really good job of actually staying with it and thinking through what you were doing. So that's all. That's all really good practice. So rather than trying to pick apart anything that you may or may not have done in there, I'm going to show you because you did mention sometimes you're having a little bit hard time with bias, and I'm assuming that's outside of the most salient session, high and low type of thing. So obviously, aside from the contract change that I already mentioned to you, this is how I was kind of looking at the day. This is the 15-minute chart. So if we go to let's go to the daily. This right here, I had the quadrants of this wick that were all-time highs. That's what that is. So now let's go back to the 15-minute chart. And then what this is here is generally when we start getting into a spot where we're not, going back to the next day, or we're trading in a spot where we haven't been for a little while. I usually will go back now that I've kind of figured out what things are extremely salient. So when we were trading in here, I went back to or trading around in here it might have been actually right around 7 o'clock. I went back into because obviously these vertical lines are the 6 p.m. to 6 p.m. daily. So as we were trading in here just right around or just before 7 o'clock, obviously this day from here up into here, we're already trading above that. So I go into this day and then look at time frame in here and pull out the most salient thing as of where we're trading then based on what I know is pertinent. So then I went to the what day was that? Right here. So I went to this area right in here where we were trading, and this is the first presented 5 minute fair value gap after 10 a.m. So let's see, this is probably 9:30. Yeah, so on this day, here's the 5 minute fair value gap, and I ran that all the way across. So then here we have the quadrants of that daily premium wick at all-time highs, and then this is the 10 a.m. first presented 5 minute fair value gap from 6/3. So come back over to here on the 5 minute chart, and here we have the grip quadrants of that premium wick. That way, if we on the 5 minute chart had got above this 5 minute fair value gap from 6/3, then I would have been okay. Let's at least try to get to here, or potentially all time highs. So that's kind of the basis for what those are. So then I didn't take any trades in here, but I had this marked out, where I was marking this out as I was going. So then I took as this traded down here, and we closed a 5 minute body below this previous 5 minute fair value gap. I ran uh, the quadrants on this. This obviously was not a bearish order block yet. So this one would have been a bearish order block. So drop down to the 1 minute chart. And again, I'm just kind of giving you a rundown of how I was going through thinking through the day, and then I'll get into this morning. So um, here's the quadrants of that 5-minute bearish order block. You see we hit bodies here, bodies here. 8 a.m. open is right here. There's not really much of an 8 o'clock fair value gap. There's a little bit of a gap right in there. But we got bodies here underneath it. So anyway, so that was kind of the turning point of how I framed that. And again, if we had got above this on the 5-minute chart, then I would have been targeting, one of these potential gradients. Anyway, nonetheless, let's go back to the 5-minute chart. So from a daily perspective, this is yesterday's 9:30 open, and everything below it on the next contract is everything from here to basically down in here is all of the opening range gap that we had not touched at all yesterday. Anyway, I just want to bring your attention to a couple things. So once we had this bearish price action that started selling off, we've talked about this before, but again, just going over kind of a higher time frame. So this is back the end of the 2 o'clock 4-hour candle. So this is the first presented fair value gap from 5:30 to 5:59 a.m. That's what that is right there. So it trades back down through. And again, what I did was I just drug over. This was my 30-minute range. So as it traded down below yesterday's settlement, as I drag this over, and now here's our new opening range where we're trading. You can see we're banging consequent encroachment of that range, not getting to this first presented fair value gap of 5:30 to 5:59. Now, granted, this is a 1-minute fair value gap. Let me stop for a second and give you one more thing. These dotted or dashed quadrants is yesterday's daily candle from 6 p.m. to 6 p.m. Not true day. So that's what those are. So we took it out. We traded above yesterday's high. And then as we got back below this, now on the 5-minute chart, you can see now we're back inside yesterday's range to start potentially looking for, even if you didn't have this on there, whatever. But that's what those dashed lines are. Is we opened here, ran up, took out yesterday's high, and then got back down below it with some displacement on the 5-minute chart. Respected the 30-minute range of this 2 a.m. candle, 4-hour candle. Again, here's yesterday's high. Oh, here's another thing that's salient, remember. This right here is the first presented fair value gap, first 5-minute fair value gap of yesterday's regular trading hour PM range. So 2 o'clock. So again, we start out with 2 o'clock to basically 5:59, whatever. There's our range. This is the first presented fair value gap in it. That's a 5-minute. We'll run that, and I run that out, and that's what that is. So we got to it there. And obviously from this beginning range perspective, we had already taken out the low of it, and then we traded up and took out the high of it, along with taking out the high of the previous day. This 10 a.m. fair value gap, 5-minute chart from back in 6.3, stopped it, faded back down below yesterday's high. Now to take it down into a little bit of a more daily thing, I was awake for a lot of this BS right here last night. Normally, I know, I mean, yes, it's pertinent, but I have generally not been marking out that first 30 minutes from 0 GMT to 0:30 GMT or 12 to 12:30 a.m. But in this case, it worked. All it did was work it from midnight to 3:40, and then rallied and took out yesterday's high and did all that. So I saw all of this here as also a pretty significant draw. So when this was happening, even though I didn't trade it, I was looking at this because all it did was actually just work this range, stay in the upper quadrant of the, this is the 9:30 to 10 p.m. range for the 10 p.m. candle. So it basically stayed in the upper quadrant of that range. So basically the low of this range had never been touched. So now I had up in here, we had the draw of this, all of this consolidation, the low of this 30-minute range that was prior to the beginning of the 10 a.m. or 10 p.m. 4-hour candle. This right here is the 6 p.m. to 10 p.m. candle. So these relative equal lows would be our initial daily sell side that had never been touched. So I was starting to build a lot of draw. Relative equal lows here on the 5-minute chart during all this consolidation. Relative equal lows here. Relative equal lows here. Took out yesterday's high. Traded back down below it. And then again, going off of the fact that yesterday's opening range gap on this contract had never been traded to, because this is 9:30 open. So adding all of those in there, that was my draw. And what I learned, what I was kind of last couple of days with all of that effed up, very range bound, first 30 minutes and into 10 o'clock, the very, the chopped up back and forth and, very high resistance, is I started going, I had the thought process. Here, this is just to clarify something here. That's since there, I grabbed the first 30-second first presented fair value gap once it started doing this, or kind of this back and forth and using every candle's range. Anyway, so go back to my premise. So as this opening, as we open 9:30 here, I drug this range, this previous range over, and we never made it above the consequent encroachment of that range. And so here we're banging around. What I was going to say was, even from yesterday, when it's banging around like that, generally once it gets past the 9:30 to 10 o'clock and you have the beginning of the 10 a.m. candle, generally once the move starts, as well as I do, that it generally has, it has quite a bit of movement to it. And usually, depending on how the overnight session is gone, usually there's more movement to it, whether it's because it's the regular trading hours or it's, New York AM, so there's more volatility or whatever. After 10 o'clock, generally you have a little bit bigger move than sometimes you do on the other candles, the other 4-hour candles overnight. And even, in the afternoon session. Anyway, that being said, to help with the high resistance, I kind of went back and looked at it and I was like, okay, I may still enter on a 1-minute chart, but with all of the chopping around, was like, I'm going to use literally, even if it means that I enter a trade later, because there's still usually a lot of movement, even if it means I enter the trade later than I could have on a standard 1 minute chart, at least, at least I have a higher time frame market structure that does not give me as much chop to where I can see more clear as far as where it's wanting to go. So so obviously this is the, let me take this back here. So this is the first, this is 9:30 to 10 o'clock here. So I went back to, so what I had on the 4 minute chart was, this is 9:56. So I had a 4 minute fair value gap right here. And then obviously we had talked about all of the draw previously. These lows, and then the opening range gap. So, but probably the biggest thing is that by going even after this range closed, going, it might chop around for 25 minutes on the 1 minute chart, and that's great. But here, like on the 4 minute chart, here's 10 o'clock, so I got 1, 2, 3, 4. So there's 16 minutes of, if you go back to the 1 minute chart, this clears up 16 minutes of chop, right? But here's my 4 hour SIBI. So let's go back to the 1 minute chart. And then once that's formed, you have that on there. And here's all the up and down 16 minutes of could be there, could be wanting to go there, that you kind of clear up by going to the 4, 5, or 3 minute chart and just waiting for a little bit more clarity, even if that means that you enter a little bit late. So anyway, so this is that 4 minute fair value gap, and then we traded back below midnight open. Here's the 9:30 open. There is a little silver bullet right here. So I don't even really need to necessarily look at it, but this is probably also, once this trades back up into here, this is probably optimal trade entry for this range. But anyway, so we get back down below this 4 minute. Here's the 1 minute silver bullet. And so I don't remember where exactly it was I entered. I believe it might have been on this, candle right here. And then I put a this 9:30 open is yesterday's. I just had it on there to mark the yesterday's opening range gap. Anyway, so I had the majority of my take profit was right here, and then I left some on to get to the this is, clarify something here. So you can see this is from here to here is the opening range gap. These quadrants are not the quadrants of the actual opening range gap. This is the 50% of yesterday's daily range. So remember, we had pierced the high of it. Back up in here, we took out yesterday's high and then came back down into it. And so I just left this on here and put my remaining take profit at this 50%, which eyeball of yesterday's daily range, which just eyeballing it is, probably a little bit less than the upper quadrant of the opening range gap. So anyway, but probably the biggest thing that I would say take away, again, I'm not really addressing your video because I think it's very good to get in and just, up and down, up and down, up and down, up and down. So that being said, I just kind of want to go over again how I kind of framed the day. And when I get into, now that that we've talked about, and I'm learning that the first 5 minute fair value gap after each 4 minute candle open is pretty salient. So I went back and grabbed this one clearly, all the way back from June 3rd. This fair value gap stopped this entire today's daily candle, traded back down, and then came back down below. The other thing is too, is that these ranges, how they work together, you bring that over, okay, this ran up into that, and then, okay, if I sold off here, let's say I missed something here, here's the 9:30 to 10 p.m. range from last night brought over. So even if you don't quite get in there, I mean, there's multiple things you can do. 30-second fair value gap, boom. If you understand this draw. So let's see what happens when we bring over. Okay, well, there you go. So even if you never put on here a 30-second fair value gap from this 9:30 to 10 o'clock range this morning, here's your other bearish confirmation using the previous 30-minute ranges. This one stopped this, this one traded down, or this new range here was made, stopped at consequent encroachment of this previous 30-minute range, and then comes down, comes up into optimal trade entry of this range. And then let's say you missed everything in here. You literally, if you have a bearish bias, even if you don't, you could look at it and go, okay, well, let's say that you're on the right contract. It's like, well, I have an opening range gap down here that, clearly it didn't make it through this 30-minute range. And clearly it's getting back down below the midnight 30-minute range. And now it's below the 9:30 to 10 p.m. 30-minute range, and using the first presented fair value gap of that 9:30 to 10 o'clock p.m. range from previous. So anyway, those are the big things that I think would be pertinent for you, because your drilling is really good. Just pushing the button, and by doing that, it's forcing you to actually stay with the trade and be in there and look at each one and take one on, put one off, whatever. And that's all very, very good. So that's why I kind of decided to go over some of this kind of a little bit of the higher time frame stuff as far as how I was looking at it this morning. So anyway, there you go.